Hey there, traders and investors. Welcome back to Fibonacci Traders YouTube channel. My name is Tamir, and this is previous weekly market recap, and we are preparing for the next trading week, short week. Like, subscribe. Let's see the charts. Let's sit back now that the stock market has closed. It's time to take a look at what the stock market brought us in the last trading week, a shortened trading week that started on December 30th and ended on January 3rd. In the trading week, the S&P finished down 0.5%. This is how it looks on a daily level, and this is how it looks on a weekly level. Always during weekends, make sure to zoom in and zoom out, both daily and weekly. And sometimes you also need monthly and yearly views. Daily S&P is bearish, C, weekly bullish. A, currently bearish, moving from 575 gap. S&P had strong 20, 24, now resting. Weekly, 580 support, 592 resistance. This means that in the longer term, in longer trends, we are bullish on SAPI at the daily level. We're in a bearish trend. The S&P is trying to move away from that gap at 575. In my opinion, this gap must close. We're still not out of the woods regarding the risk that this gap won't close. I believe this gap has to close, and then the daily levels in the S&P will regain the strength they need. They've had a very good 2024, and as you can see, they are kind of resting. Let's see where the S&P is heading on a weekly level. 580 is a very important support, and 592 is resistance. A breakout and a close above, and we're heading to the 602 area. The QQQ is rated A in a bullish trend on a weekly level and rated C in a bearish trend on a daily level. You always need to look at both the weekly and daily levels here as well. And if you're swing traders, what happens in 5 minutes or 15 minutes? I see a lot of people who are swing traders, but suddenly they pay attention to the 1 minute and 5 minute charts and get scared by all sorts of candles that happen during the day. Guys, let it go. It's not interesting. If we're trading based on reports for a few days or a few weeks, what interests us are daily candles and weekly candles. And if you want, of course, use the FTI, pay attention. With the push of a button, it helps us to make a better decision. First of all, it gives us the most accurate perspective possible. Nothing is 100%. There's no system that's 100%, but this system is the FTI. As you know, it's not. It's not an indicator. It's a system for purely technical chart rating. He doesn't care what's written back here, whether it's QQQ, whether it's Moshe, or whether it's Fibonacci. It rates. This system rates the chart that you put it on. Notice it provides time frames. It can start from a second and can go up to a year that you set for it. Please note, it gives time frames. It can start in a second and can go up to a year. Pay attention to the QQ, which in the short daily report, over the last 2 weeks, we have been in a short-term downtrend. That's why we are rated C in a bearish trend. A break below 505, and we're on our way to close the gap at 492. On a weekly level, the QQQ is rated A in a bullish trend, which means that right now, this is the highest rating for the trend we are in, and we are in a bullish trend. 504 needs to be maintained as support, while 519.30 is resistance, and 910.30 is resistance. The Dow Jones is also rated A in a bullish trend on a weekly level, currently at the 50% Fibonacci level at 422 support, with 429 as resistance. The Dow Jones, pay attention, is rated C in a bullish trend on a daily level, with 421 as support and 428 as resistance. He's pretty stuck here in the same price range, continuing to decline, and we're on our way to keep sliding down along this red trend line. The IWM, on a weekly level, it is rated B in a bearish trend. Notice we are at the 618 Fibonacci level at 219.54 on the weekly chart. A super important support area. Continued declines breaking below this. Another weekly closed low, 2/19. And we're on our way to 200. And we're going to look at 203.10 and 203.82. Note that at the daily level, The S&P 500 rates the Dow Jones with a bullish trend rating, and the S&P 500 is identifying something at the daily level that we aren't seeing. That's why we have the S&P 500. Note that it identifies 207, 10, and first of all, we can also identify 217 as a very important support area. Do we have a double bottom here? Bottom breakout above 226. Aiming for 200, S&P rose 0.92. 32 RSP ended Friday with slight gains of 0.92 on the weekly level, rated by Greetings A in a bullish trend. Why? Because we are still here above the trend line of rising lows. 174, the lower border of the yellow zone for the third week in a row holding support. Below, continued declines, we are at 71 at the daily level. Ratings, no comfortable entry. For a long position in Bitcoin, weekly and daily ratings are bullish. 1 day and 9 hours left until the weekly candle ends for Bitcoin. A comfortable entry for a long position in Bitcoin. Note that at the time of recording this video, the weekly rating is bullish and the daily rating is also bullish. Right now, as we record this video, there's still 1 day and 9 hours left until the end of the weekly candle for Bitcoin. Until the end of the weekly candle for Bitcoin, 4.5% gains now, daily trends. Entered yellow zone. Inside 97,900, support at 60 to 99,898, then above 100. And inside 97,960, now this is the support, continuing to be 99,898, then back above 100. As of today, at the weekly level, it's 7%. Note that we're above the upper boundary of the yellow area, above 33.60. Continued gains. Will we manage to close the week above 38.82? If so, we're on our way back. Strong to 4,000 area, 109. Note that at the daily level, we're currently stuck at 50% Fibonacci retracement, rated a bullish trend at the daily level, compared to a bullish trend rating at the weekly level. Notice that 33,600 was a very important support area that broke in mid-December and is now resistance. Continued gains to 37.22 and then back to 38.88.10 or x-axis at the level. The weekly rating is a bullish trend rating. Why? Because we still have rising lows here. But note that we have been moving sideways for 1, 2, 3, 4, 5, 6, 7 weeks, just stuck in the yellow area on the weekly chart. And when we're stuck in the yellow area, it means don't do anything. While the price is stuck in the yellow area, that means do nothing, and then you need to dig down and zoom in. Don't go to the daily level. Note that it's rated a C in a bearish trend. We're still below the descending trend line. The S&P finished this ETF on Friday up 2.9%, rated a bullish trend. Unlike the 10X has SMH, he is ranked. Polish crimes, for those who don't know, the two ETFs are not the same. The S&P 500 and the XSM are ETFs from different investment houses, and the pie is divided differently, which is why they sometimes behave differently. If we take the S&P 500 for the last 34 weeks, note that this is the swing high and swing low. We're stuck between the 50% level at 241 and the 61.8% level at 251. 903, 4, 5, 6, 7. We're looking a bit further back. And we can say that since September, we've pretty much been stuck in the same price range. Now we also got the buy signal on Friday. We're rated a bullish trend, and there are continued gains, and we're on our way to the upper boundary of the broadening formation. Mags is obviously trying to dodge this double top with the Magnificent 7. Now this support is still rated in a bearish trend rating C. Rating C is the lowest rating for a trend. Did the bears miss the opportunity card to close these gaps? Let's take a look. One candle doesn't change the trend. The longer trend, we have one candle against several candles. Down. We're in a bearish trend, rated C. Weekly rated A in a bullish trend. On the weekly level, you can see that we're rated A. In a bullish trend, you can see very clearly why. An upward trend line of higher lows, Apple. An upward trend line, higher lows, Apple. It finished a bad week for it, down 4.8%. And if you look at last week's weekly summary, we talked about this doji on the weekly level and mentioned that there was a very high chance for a correction in Apple. We also talked about this doji in last week's summary, the doji on the trend line, doji on the weekly level. Notice that Apple has had 5 consecutive red days. What does that mean, red? It means it closed lower than it opened. When was the last time that happened to Apple? In last week's summary, we had a doji on the trend line, a doji on the weekly level. Notice that Apple has had 5 consecutive red days. What does that mean? Red. It closed lower than it opened. When was the last time that happened to Apple? In November, but it was only 4 days of red trading. When did it happen to her? I don't remember. In any case, she took with her the profits of the last week of December and the week of December 16th. And it neared the lows of the second week of December all in one candle. It retraced almost 3 weeks of profits. Consider the FTI, examine the last 21 candles, see 242, a broken support below. In Apple, Microsoft saw 1.6, nearly 7%. See 3 consecutive weeks down, but this doji may signal a weekly break return. 242, support broken below. In Apple, Microsoft with a week of 1.6, almost 7%. Note 3 consecutive weeks down, but this doji could very well be at the weekly level that signals to us that now is the time for the fragments to come back in. Let's see, it's still too early. We're supported here with a doji on an upward trend line of higher lows, which is why we're in a bullish trend on the weekly level. On the daily level, we're in a bearish trend. We need to wait. We need to wait. I want to see at least 2 days closing above 429 in Microsoft. As for Nvidia, what a lucky day it was today. It's Friday. It's Friday. Nvidia had strong gains of 4.45%, breaking out of the price consolidation it had over the past week and a half to 2 weeks. It jumped. From the lower boundary of the broadening formation, moving up to 146, reaching the upper boundary, it finished its weekly chart. After 2 doji weeks, Amazon ended the week up 0.2%, with support at 218. It shuffled the cards, and now it seems we're back to an A rating, bullish trend. Amazon ended the week up 0.2%, supported at 218. Daily, we're still in a short-term bearish trend. Meta ended at 0.8, rated a bullish weekly, supported at 583. A breakout closing above 607 for 2 days suggests new highs in Meta. And that's why rated B, rated C in bearish. Meta finished the week at 0.8, rated A bullish on the weekly level with a very important support at 583. A breakout closing of at least 2 days above 607, and we can assume as a working hypothesis that we're on our way to new highs in Meta. Tesla, what a luck that it was Friday, when Tesla had an increase of 8.22 and 8.22. Still, a bearish trend. In the short term, pay attention. We are in mid-December with lower highs and lower lows, supported at the weekly level on the upper boundary of the yellow zone. And that's why I always say price follows Fibonacci. Support at 376, resistance at 424. Is it a good entry point for Tesla for a long position? As of now, I don't see it. AMD finished the week in the green. It's the second week that AMD is green. But all this green is swallowed up as an inside candle. This week, we have green dojis. Are we seeing that the bears are weakening? And are the bearish signals for AMD fading? Pay attention. To the daily level, we have a higher low, what's called a higher low on the daily. There might be the beginning of a double bottom here, which could take us to close that gap at 137 and above that. The bears of AMD are starting to weaken. And are the breaks at the daily level? Pay attention. A higher low, what's called a higher low on the daily. There might be the beginning of a double bottom here, which could take us, first of all, to close that gap at 137, and above that, and above that AMD, it's very important to keep an eye on it. True, NVIDIA is very interesting. NVIDIA is the leader, and NVIDIA. But AMD, friends, AMD is having a good year. In 2024, purely from a technical standpoint, maybe 2025 will be AMD's year. AVGO has had its third consecutive week without much movement, with support at 226 and resistance at 251. Pay attention. This is how it looks on the daily level. There's price convergence here. And until it either breaks down or breaks up, there's not much to do. Shopify is trying its best to stay above 104.5 because breaking below 104.5 would bring it down to close the gap at 92.37. On the weekly level, Shopify is up by 1%, with 108 being the resistance. Let's take a look at the last 13 weeks. Notice 103. 103, and of 104 is support, 111 is resistance. Breaking below 104 would erase all of this candle. Palantir finished the week up by 1%, but pay attention. Palantir has been pretty stagnant for 4 consecutive weeks. That's okay. After all this rise, the bears, the fragments, or rather the buyers, are keeping the embers burning, keeping Planeta low, not letting the sellers run wild, not giving the sellers too many opportunities. To break them down, we got a return of the buy signal at the daily level, rating A, bullish on the daily, rating A, bullish on the weekly. Pay attention. All time frames are bullish for Palantir. Netflix finished the week, the 4th consecutive week in the red, down by 3% last week. The decline continues. We're at 841. Pay attention. Netflix at the daily level must hold above 877. Otherwise, all this meteoric rise it had here during November from 812 to 877, all this rise will simply be erased. It will be erased.
Once again, thank you very much for watching this video. I do hope you find it helpful, educational. If so, like, subscribe, check the links in the description below. Join me today on this amazing journey. We will go hand by hand until you will know how to make money from trading. Until the next video, stay safe.